Welcome to In Depth for a closer look at what is making mining headlines in the Americas. Gold producers are pulling in record revenues and cash flow, but higher prices for commodities mean the costs of building and operating mines are also rising. Mining Weekly's deputy editor for North America, Lizo, who is based in Toronto, Canada, joins me to discuss the issue. Welcome, Lizo.
Hello, Martin.
Are costs becoming a problem for gold producers once again?
Martin, it does seem to be something that is becoming an increasing concern for the industry. We all remember that the mining sector, and certainly gold included, had a big run up in cost inflation in the period 2007 and most of 2008, where companies were really trying to pump out production, and so they were seeing higher prices for things like labor, issues, input materials like steel, equipment, and so on, were all pushing costs up. And then, of course, late 2008, the financial crisis hit, and the mining companies all, curtailed production, shut mines, put new projects on ice, and so that meant that things really cooled down significantly. But now we're actually in the middle of the mining quarterly season, primarily the gold producers here in North America. And the rising operating costs and increasing pressures do seem to be a trend that we're seeing from the companies that have reported so far. First, certainly, as the projects and the mines are all ramping up, everyone's focused on getting those projects into approval stage, into construction and into production, while the mines that had been curtailed, maybe when things were looking a little uncertain, are now all pushing they're also pushing production. So companies are they're competing for labor, they're competing for equipment, especially the big long lead time items, and then the yellow equipment, the yellow metal, the big earth moving equipment. So all those things, the prices are starting to rise. Of course, things like steel, oil, and then another thing that companies are having to deal with is the stronger currencies in the countries where they're operating, certainly compared with the US dollar, which is what a lot of the mining companies report their financial results in. And then another thing is that as we're seeing the price of gold and the other precious metals and byproduct metals like copper, as those prices are rising, it means that companies can then look at mining lower grade ore, and still have it be profitable because of the higher prices. But then what that does is that pushes up the overall cost for the mines and for the companies overall. So we certainly are seeing increased pressure on those operating costs. That's something that the companies are talking about. Of course, they do try and see what they can do to mitigate that. For example, Barrick Gold, the biggest gold producer, has taken some steps to hedge oil, to hedge, for example, the Australian dollar, to try and protect itself and give itself a bit of certainty there. Barrick actually, they managed to keep a lid on their costs last year, but they've said that they're expecting higher costs going into 2011.
And what about capital projects? I understand those budget estimates are also rising.
Yeah, I mentioned Barrick in terms of the operating costs, and really one of the big stories or big items of news that came out of their fourth quarter results that they reported was that Barrick's now gone back, because of these higher costs and the inflationary environment that they're seeing. They've actually gone back and reviewed the capital estimates for their big projects that they've got going on in South America, and they came back and said the two projects that they're building at the moment, the Pueblo Viejo project in the Dominican Republic, they own that with Goldcorp, but Barrick has got a majority stake and they're the operator. That project is now expected to be between 10 and 15% above the previous budget. The Pascua-Lama project that they've got there on the border of Chile and Argentina, they're now forecasting that capital cost will be between 15 and 20% higher. And then a third project in Chile, Cerro Casale, that Kinross has got a small stake in that, but it's mainly a Barrick project. And they're now, that project hasn't been approved, so they're not in construction or anything yet. But they've said they're going to go back and do a review of the Cerro Casale estimates as well, and believe it could end up between 20 and 25% more expensive. So it certainly does seem to become an issue. for these big projects that the gold miners are looking at in their quest to increase production. Barrick, obviously the industry leader, they've made this announcement, and I think certainly we could see similar sorts of reports coming out of the other companies that also have projects that they're building or planning.
At the end of the day, should these rising costs be a concern for mining companies and their shareholders?
Yeah, it's a good question, really. Certainly the analysts and investors that have long enough memories to think back to sort of the heady days of the 2007-2008 period, where costs were surging and really putting a bit of a squeeze on the gold miners. You could understand why there's a bit of uncomfortableness when they see the costs starting to creep up again. But definitely, first of all, the thing that we're hearing from the miners is that the inflation is not as bad, certainly yet, but it's not the same situation as what they saw during that pre-financial crisis period. So that is one thing. And then, of course, the gold price has just gone up so sharply since that period that it's left any kind of cost inflation in the dust. And so while the companies maybe are seeing higher costs to mine the gold, the margins really just have expanded and blown up. That certainly at the moment it doesn't seem to be too much of a concern, that while costs are rising and are expected to continue to rise, especially as more projects are being built. It is, for example, in terms of labor, companies are increasingly having to compete in areas where there are a lot of new mines, new projects coming into production or expansions underway where companies are hiring. We look at areas like Quebec, for example, here in Canada, Australia, and so those costs are going to keep rising. But I think if we look at the price of gold, if we look at also, of course, the byproduct metals that a lot of them produce, the silvers, the copper, it definitely, I think the gold mining business is definitely still a profitable area to be in.
Thank you, Lizo, for your time. That is the show for today. Join us again next week for more news and insights on mining in the Americas. I'm Martin Joaquin in Johannesburg for Creamer Media.